Three stocks to buy, April 2025 edition. Yes, in this episode, I'm going to put two sure things in this episode and one that can fly to the moon or take you to bankruptcy. You make the decision, not financial advice. This is your opportunity to potentially make money for the rest of time. So, in this episode, we will talk about a data analytic company, we'll look at a fintech company, and we'll look at an EV company. Let's see if we can polarize the world as you set off to the stratosphere to financial freedom. Right here, right now on Barry Charles. Number one stock to buy, April 2025. Palantir. Yes, Palantir Technologies. Absolutely getting hammered at the moment in the last five, since the start of the year. Is it time for the turnaround? Is the Trumpster ruining everything for Palantir, or is it about to turn around? Well, we're going to look at positives and negatives of the stock right now. So one positive for Palantir is the strong government and enterprise demand. So increased government spending has been happening, but is there going to be halted right now with Trump? That is the danger signs there. But their commercial business as well has been growing. So they have been growing in the government space in there, but will it continue is the $1 million question. But the commercial side is where a lot of money can be delivered. Also, AI expansion, folks. Yes, AI expansion is continuing all around the world. Palantir is at the forefront of this movement. Can they continue to do this going forward? That is going to be the question mark for them to be up at the top of the tree. A potential milestone, yes, for Palantir has been being profitable for the last multiple quarters. Continue. If they can continue to consistently go up and up and up, look out. They are absolutely a great buy for you as the investor. Proving they're a reliable company. And management know how to be cost effective. And also Palantir positives at the moment is international growth is becoming bigger and bigger as they branch into Europe, and if they can further go afield, then look out, they are flying to the top of the world with more and more revenue come flying in. Palantir AI software needs to become, so if we're going to look at a bit of negatives here, needs to get to the top companies in the world. If they can get to the top companies in the world and they use their AI solutions, then you're starting to go, wow, this company is the real deal. Palantir has the next one is stock compensation for this company. Can they finally deliver the right stocks to get themselves out of trouble here? In terms of their compensation, they have continuously given stock increase to their employees, which has led to stock increase of the stock. Outstanding shares outstanding, which leads to less money for you and more profits for the company, not yourself, as they profit from you into the future. Palantir, what do I see? What do I see the dangers? Obviously, the high volatility at the moment with Palantir. Will this continue into the future? Potentially, but I think the stock is very undervalued. I can see it growing to the future. So what is Palantir doing right here, right now to improve themselves to be the AI king? They're expanding commercial business. Partnerships are being created for future growth in the finance space, the health care space, and manufacturing. And they continue to do this and work with more startup companies, and then look out, they are on a roll to profitability, Palantir. In the current market right now, I would say just keep buying the dip. If they can get lower and lower to $50, then look out, just keep on buying, because they're going to be a great way to make money long term, not financial advice. Number two stock to buy is SOFI. Yes, SOFI, the company that keeps on doing wrong in 2025 in terms of stock market price going down to as low as $11. Is the stock in a correction mode, or is it just people not understanding the company, and you could potentially be making big mistake if you don't buy shortly? Well, let's have a look at the positives for SOFI and then the negatives. So one of the positives for SOFI right now is strong revenue growth. So SOFI has aggressively expanded its product offering, including student loans, refinancing, personal loans, and home loans, which started in 2002 when SOFI acquired a bank license which allowed them to hold deposits and issuing loans, which is very important for profitability and scalability for this company going forward. Also, positives for this company is diversifying business model. So SOFI does not rely solely on fintech system, because which offers stock trading, cryptocurrencies, investing, and a technology platform, Taleo, that provides infrastructure for other fintech firms. Rising, which is really, really impressive. They can continue to do that. Also, in the positive, rising membership continues with 7 million members in the industry. Very strong demand for the financial products looking at that. Let's have a look at some negatives for SOFI right here, right now. The stock profitability concerns. SOFI has been looking towards profitability of late, but it needs to do it quarter after quarter after quarter. So people and institute investors go, yes, this is the stock for me. I need to buy in very much now. So yeah, if they want to be taken seriously, they need to prove profitability consistently. The number 2 negative here is the macroeconomics. If interest rates don't go down and they stay stagnant, they might even go up again. A significant potential economic crisis could occur with less demand on personal loans and higher loans as people cannot afford it, and life will be a misery. Also, negative is stock market volatility at the moment. There's been really up and down for this company, very much down of late. But if you can see through all this and look at the growth story of this company, it's only just the beginning. So let's have a look at what the growth is happening for SOFI. It's focusing on expanding its leading business while improving profitability, aided by the banking license. The company is also investing in technologies like Galileo and Technesis, which power financial infrastructures for other firms, providing additional revenue streams beyond lending for SOFI. So that's very good to see. And hopefully the revenue and profitable into 2025, and you should see them really skying high with stock price of 2026. So this is a stock not to miss out on if you still can. Third stock to buy, and this is the riskier one of all of them, is NIO. It's the little company everyone has forgotten about, but the few that are still in it, this company can basically make you bankrupt, or you could see it flying to the moon. So you don't have to make yourself bankrupt with this company. You could put 5% in this company, and if it does go flying to the moon, then you're laughing. And if you lose 5%, it's not the end of the world. If you go any higher than that, good luck to you. Strong position. Let's have a look at some of the positives for this company. So strong position in the Chinese EV market, so they get support at the moment from the government, and the EV production line at the moment is huge. Innovation and technology, so the batteries as a service is well ahead of the space, including Tesla. If they continue to go on this format, this could be a game changer for this company. Expanding global presence. NIO has started selling in Norway, Germany, and Netherlands. If they can get into the North America, so America, Canada, then into South America, into Australia, all these sort of countries, then they can be a global sensation. But NIO is trying to be the first to autonomous driving as well. And if they can get there first, this is a big ticket item for them for sure. Let's have a look at the negatives for NIO. Right now, obviously, profitability has been the issue for NIO for the last 5 years. It's just been an absolute disaster. Trying to find some way to get to profitability has been NIO's nemesis. If they can stop this cash burn, then NIO could be a home run. But at the moment, they've struggled to deliver that. Supply chain issues, because NIO is not the number one company they can get held back longer than the top companies for getting things in which can hold back deliveries, costing them heaps of money in the future. But yeah, stock price overall over the last 5 years has just been a disaster for this company, and really it's not looking good. But if they can turn it around, it could be. What are they doing in terms of growth? They're expanding battery swap stations network, aiming to be more convenient and lower cost to the consumer than other EV companies. NIO also um, has new models in the premium and mass produced range, hoping to build business that way. And obviously AI autonomous driving. If they can get there first, then look out. That is 3 stocks to buy for this episode. Remember to like and subscribe to the channel, and I'll be back with another video very shortly. Have an awesome day out there.